Let's have a look at task 7 from the Business Tax Sample Assessment 2. Task 7 is about the administrative requirements for UK tax law. So in the first part of task 7 then, we have Ryan, who has a plumbing business and has prepared self-assessment tax returns for several years. He pays all his tax by self-assessment, and his income tax and class 4 national insurance liability each year is as follows. So we can see there are 3 tax years and 3 tax liabilities. And we can see at the bottom of the screen now, calculate how much income tax and class 4 national insurance Ryan will pay on each of the following dates. If your answer is 0, enter 0. So we have 31st of July 24, 31st of January 25, 31st of July 25, and 31st of January 26. So here are the 4 dates, but we've also got 31st of January 24 there as well, and we will see why in a moment. So we've got those 3 tax years, haven't we? So we've got the 22-23 tax year, and we saw in the question there are £900 to pay. So 22-23, that is the year from the 6th of April 22 to the 5th of April 23, and the tax return needs to be submitted by the 31st of January 24, and that's when we need to pay the £900. Okay, so £900 will be paid for that year on the 31st of January 24. So what we all need to think about is, do we need to also pay a payment on account in preparation for the following year? Because we know that in the following year, in the 23-24 year, there's going to be an amount to pay. Now we don't know how much that is at the 31st of January, but we need to start paying ahead. So here are the reference materials, and we're looking at section 9 here in terms of payment and administration. So yeah, we've got our filing deadline. So as we mentioned already, we've got the filing deadline of 31st of January, and then our payment deadline. So there we are, 31st of January following the end of the tax year. So in the 22-23 year, we need to pay by the 31st of January 24. That's what we just showed. And then we also need to make the first payment account on that same date as well. And then the second payment account will be on the 31st of July. Okay, but if we scroll down a little bit more though, we can also see that payments on account are not due if the tax payable is less than £1,000. Okay? Or if more than 80% of the prior tax year was collected at source. And so that's being deducted from payroll. So that applies in this case that we have £900, and that's less than £1,000, isn't it? So that means that there's going to be 0 payment on account made for the following tax year on the 31st of January, because that £900 is less than £1,000. So that also tells us that there's no second payment on account to pay on the 31st of July. Okay, so there are no payments on account relating to the 23-24 tax year. So if you move on to the next tax year, so we now get to the 23-24 tax year when we have a liability of £1,200. Now I'm not going to put any numbers in the answer yet because they may change. We need to keep on sort of looking ahead. I'm going to fill out my table on my rough paper, and then I will add the numbers. So anyway, so we've got 1,200 now. So let's put that here. There's our 1,200. So that's how much tax I need to pay on the 31st of January 25. Okay, so remember that we need to pay our tax and submit our tax return by the 31st of January in the year following the tax year. So the tax year finished on the 5th of April 24, so the 31st of January 25 is that following period. So I need to pay my tax due, that's the 1,200 less any payments on account. Well, we can see we've got 2 zeros there, so that means I just need to pay the full 1,200. Okay. Now we also need to take into account that in the next year, in the 24-25 year, I'm going to have some more tax to pay, and do I need to start paying some of that as well? So in this case, yeah, that 1,200 is greater than 1,000, so we do need to start paying towards the following year. So we just need to take that 1,200, divide by 2, and that means on the 31st of January, I'm going to start making payments for the following tax year, even though I don't know how much tax to pay yet. Okay, we don't know what this number is, but it doesn't matter. I'm just going to take half of the 23-24 liability and make a payment towards the following year. And then the second half is going to be paid on the 31st of July following that. Okay, so I've made 2 payments on account for the 24-25 year. And then in the 24-25 year, I managed to work out that we've got £2,000 to pay. So we've worked out our liability. I've got £2,000 to pay, but notice I've already paid 1,200 towards that. So that means on the 31st of January, again, let's remind ourselves, because we need to make a payment and file our tax return for the 24-25 year by the 31st of January in the following year. So yeah, I've got £2,000 to pay. I've paid 1,200 already, and that means I've only got £800 left to pay. Okay, so that's the full 2,000. And because our 2,000 is more than 1,000, I also need to start making payments on account for the following year. So for the 25-26 year, I need to take that 2,000, divide by 2, and make a payment on account for the following tax year. And I do that on the 31st of January as well. And then, 31st of January 26 was the final year in the question. So do you see what technique I'm using here? In this table, hopefully that will help you to get the answer right. So I've got a column for each payment period, either 31st of January or 31st of July. So there's a column for each payment date. And I've also got a row for each tax year. So we can see, look, there's the liability and there's the payment. Second year, there's the liability, there are the 3 payments, although 2 of them are for 0. And then there's the liability, there are the payments. So it's helping me to keep track of all the liabilities and make sure they've all been paid, whether through a payment on account or through a balancing payment. Okay, so we can see, for example, for the 24-25 year, we've got that balancing payment of 800. Now, it's not relevant for this particular question, but it may be for the question you do in your assessment. Imagine that we have a falling liability. Okay, so imagine instead of this being 2,000, imagine it was 1,000. So we'd already paid 1,200 on our payments on account. So that means instead of having a balancing payment, we'd actually be able to get some money back. You say, look, our liability is only 1,000. We've paid 1,200 already, so we'd be able to get a £200 refund. So having done that, though, again, let's just say that isn't relevant for this particular question. But now that we've completed our column, so we can start to put in our totals. So this is how much we're going to be paying on each of those payment dates. And we can transfer these now to our answer. So putting them in the answer is the last thing for us to do, because remember there's a combination of payments on account and balancing payments. So we can't really do this until we've completed all of the figures and their workings. Let's move on to the next part of the question. Ryan has come into the office on the 1st of February 2025 and is concerned that he has been unable to find his records for the tax years 2016-17, 2017-18, 2018-19, and 2019-20. So you need to complete the following statements. Records must be kept for, so we've got a choice here, we've got a drop-down menu of between 1, 3, 5, 6, and 10 years. So here are the reference materials. We're looking at section 9 of the reference materials on record retention, and we have to keep them for 5 years from the filing date. And there's a penalty of £3,000 for not doing that. So we can enter that now. So we've got 5 years from the filing deadline. Okay, so the answer is all in the reference materials, and Ryan could face a penalty of up to £3,000. And this penalty could apply to, okay, so we've got the various tax years. So we've got a 5-year requirement. So it's the 1st of February 2025. If we take 5 years off from that, we'd get 2020. So that means we could get a penalty for the 1920 year, but all the other ones are further in the past than 5 years, so we don't have to worry about that. Okay, so yeah, we could potentially face a penalty just for that final tax year. Okay, next then, Company Y prepares accounts to 30 June 2024 and has a corporation tax liability of 18,980. Identify which one of the following statements is true. So each of the statements is asking about when it needs to file its tax return. So here we are in the reference materials again, and this time we're looking at information for a company. Yeah, this is a company now, not a sole trader, and the deadline is no later than 12 months after the end of the accounting period, or 3 months after the notice to deliver tax return. So in this case, we've been given an accounting period, haven't we? So it needs to be 12 months with it after that. So our year end is 30th of June 2024, so we need to file the tax return by the 30th of June 2025. And if we move on to Company Z, has a corporation tax liability of 8,900 for the year ended 30 September 2022. The tax return is filed and the tax liability is paid on the 17th of May 2024. So we need to calculate the penalty payable by Company Z for the late filing of the return. And the question is identifying, is there a fixed penalty and a tax geared penalty? So here's the reference material again to help us, and we're looking now, again, same section, but we're looking at the penalties for late filing. So there is a £100 immediate penalty. Okay, so that's a fixed amount, but we also have some either fixed or variable penalties depending on how late we are. So remember, the question told us that they've got a 30 of September year end, and then they file not by the 30th September of the following year, but it may after that. So you just count out the number of days, so number of months. So we have October, November, December, January, February, March, April. So yeah, they are 7 months and a few days late. So that means that we would get a £100 fixed penalty for being more than 3 months late. And then we've also got a 10% of unpaid tax penalty after the 6 months. We don't have to worry about being after 12 months. That doesn't apply here because we're 7 months and a few days late. So that means our total fixed amount, so we've got 2 lots of £100, so we've got a £200 fixed penalty, and then we also need to deal with our 10% of unpaid tax penalty as well. So the total fixed amount is £200, and then the tax geared amount, so it's 10% of the tax payable, so that's 8,900, multiplied by 10% is going to be 890. Okay, moving on to the next part. Mihad is a sole trader preparing accounts to 30 June each year. Taxable trading profits for the last 2 years are, so for the year to 30th of June 24 is 24,000, and then in the following year 36,000. So we need to complete the statement. So Mihad will include, so one of these four amounts as our trading profits for the 24-25 self-assessment tax return. So an easy way to work this out is by drawing out a timeline. So we can see that we have the income for the year to the 30th of June 24 of 24,000, and then the income to the 30th of June 25 of 36,000. And then what we need to do is superimpose on this the tax year. So our tax year ends at the end of March 25, effectively. So there is the tax year. So what we want is 3 months of the 24,000 and 9 months of the 36,000. So if we take our 3 months and multiply by 24,000 and then add on 9 months of 36,000, then that gives us a total income in the tax year of 33,000. So hopefully that's one of the answers. Yes, there's the third answer for that. And then finally, part E, identify whether the following statements are true or false. A company has made an error in its tax return, which was identified by HMRC. This is a prompted disclosure. So yes, it's identified by the tax authority. They've told us about it. So yeah, this is a prompted disclosure. That's true. And then Brian is an electrician, has prepared his own accounts and tax returns for many years. He starts using an accountant on the 6th of April 24. The accountant identifies an error in Brian's 2020 tax return. Brian has given permission for the accountant to tell HMRC about the error. This will be a prompted disclosure. Well, no, this is Brian owning up to the mistake. They've not been notified by HMRC, so that's false. Yeah, this is a self-declared disclosure. It's not been prompted by HMRC.